What's up, guys? In this video, I'm going to be explaining the initial balance breakout report by rejection. So here we're looking at platinum in the New York session in the trailing 1 year, and obviously we're looking at the buy rejection variant of this report. So what this looks at is the initial balance, which is just the high and the low of the first hour of trading, and it checks for which side of the initial balance is formed first, then what side will break out after it's formed. So let me explain what that means, and you can see it right on a chart. So here I'm going to go to my indicators. I'm going to go to invite only. I'm going to go to initial balance, and this is automatically going to plot the initial balance of each day. And then I'm also going to be adding the market sessions indicator here that we have. You can access these indicators by, I just took off the London and Tokyo sessions because we're only looking at New York. But you can access these indicators by scrolling down and then clicking on this right here, Get Access Now. And you're going to put in your TradingView username, which you can find right here, right there. You just want to put in your TradingView username right there, click Get Access, and then that'll give you all of our TradingView indicators and all the new ones that we release. So the ones that I'm using here are the initial balance and then the market sessions. So what this report measures is, let me just show you here. So again, the initial balance is just the high and low of the first hour of trading from 9:30 to 10:30 Eastern. What you can see here is we have the high formed first right here, and then the low formed first. So what you can see is, let's look at this section right here. Let me just go to the 5 minutes so it's really detailed. So you can see that the low here was formed before the high was formed. So in the order which the initial balance low and the initial balance high was made was how you determine what chart to look at. So in this case, on this day, the low was formed first because this was here, and then the high, the initial balance high, was after, obviously. So in that case, you want to look at the low formed first, and then you can see that almost 70% of the time, price will break out to the top side, which is what happened in this day, when the low is formed first, because typically that means price comes down and then comes back up, and then you can expect more continuation higher rather than expecting this to happen. So you can expect price to move upwards because almost 70% of the time in the last year, price has broken out to the top side first when the low is formed. So when the high is formed first, you can see that almost 61% of the time, price will break the low first. So let me try to find an example here. Let me try to find an example quickly. So here, perfect. So you can see very clearly that the high was formed and then the low was formed here. Then you can see that the first break will be the low when the high is formed first. So in that case, you can expect price to reject. So all you need to think about, the way that you need to think about it is, if the bottom forms first, I can expect the top to break. And this is obviously only for platinum in the New York session. But if the bottom is formed first, I can expect the top to break. And if the top forms first, I can expect the bottom to break. Now this break means just a wick. It doesn't mean a certain candle close. It just means if price breaks out to the top side, that counts as a break. So just keep that in mind. The time frame you're looking at doesn't matter as long as you're looking at the first hour of trading, which you can easily see by the initial balance indicator that we have. It will plot on all days, as you can see right here. So it'll automatically plot so you don't have to worry about it, and it'll adjust as the day gets formed. So here are you just want to make sure you're looking at the right thing. High formed first, low formed first. Then we have a table. We have some explainer text here. We have a little more explainer text there. And then the video is obviously going to go at the bottom. If you have any questions, you can reach out to our support right here. We also have a free Discord, so make sure to join that free Discord. You can just click that right here. And if this video is helpful to you, please like, comment, subscribe. It helps us a lot. And please don't be shy with any questions. Thank you.